The office equipment industry is one of the most competitive and rewarding industries out there. 20% of the top salespeople generate 80% of the revenues. Why is that? I can assure you it's not by simply upgrading their existing customer base. Did you know that the average copier dealer loses 20% of their customers eligible for upgrade each year? It's true. They only upgrade 80% of their customers who are nearing the end of their lease. This means if your plan is up 20% from last year, you will need to generate 40% more revenue this year to hit your number. In the example here, you can see how much revenue John needs to generate to hit plan. If John only upgrades his current customer base, he finishes at 66% of plan for the year. The top performing sales reps know that in order to make plan, they need to close net new business. Aside from increasing your revenue streams with your current customers, the only other way to grow your revenue is through ZBA, or net new business. ZBA, net new business, is defined as a prospect who is currently not doing business with your company. The target here is specifically the account or prospect who is doing business with your competition. Startups make up the other part of net new business, and they can be difficult from a credit standpoint. Let's run through a few terms you'll see frequently when prospecting for net new business. One thing to keep in mind is that in the industry, over 80% of all hardware sales are leased. While the terms below are helpful, it's very important to read and understand the copier lease agreement. Now, back to the terms. Originating dealer. This is the dealer who sold the old hardware to your prospect. They are your competitor. Trade-up upgrade. This is the cost the originating dealer must include in their calculations to pay off the old lease. This includes a discounted stream of payments, minus some unearned finance charges. The service and supply costs are not included in the trade-up figure, and the customer can return the old equipment before their lease term is up. However, in order for it to be a trade-up or upgrade, this means they must sign a new lease with the originating dealer. The originating dealer is the only one who can use the trade-up upgrade number. If the customer or any competitor wants to pay off a lease, they must use the buyout figure. Now, it's very important you know if you or the customer call the leasing company to get a buyout quote, they will probably not provide it. Instead, the leasing company will notify the originating dealer that a buyout quote has been requested. To avoid tipping off the originating dealer, work with your sales manager to estimate the buyout cost. Buyout to own is one option. This includes the full stream of payments, including service and supplies, plus property tax, and the residual. This is the only option where the customer can pay off a lease early if not upgrading. The downside of this proposal is the figure is very expensive and it will likely price your solution out of consideration. The buyout to return option is the most common one used. This number includes the full stream of remaining payments, including service and supplies, plus property tax and estimated return shipping. This is considerably less than a buyout to own cost. The risk here is that the leasing company will not accept early payment or return of the equipment. The customer will need to store the equipment and make the rest of the lease payments. Once they fulfill the terms of their lease, then and only then will the leasing company issue return shipping instructions for the customer. At Offsite, we store copiers for customers who are unable to return them early and do not have space on site to store them. The average length of time we store a copier is 14 months. This means customers were in negotiations 16 to 18 months out from their leases expiring. It's never too early to speak with a prospect about replacing their equipment with your solution. Keep in mind, the competition is likely calling on your accounts 24 months out and less. Now, independent dealers will offer to pick up and store a customer's pieces of equipment for them. This is a very risky proposition for the customer as they are still obligated to the lease and they lose all visibility and control over their old equipment when they go this route. The Offsite solution will keep the customer in the loop regarding the status of their equipment at all times. Offsite specializes in the office equipment logistics industry. We have an excellent understanding of how leasing company policies work and how to best use them so you can win more ZBA business. We offer a menu of items. Many sales reps we work with use Offsite as a total solution for their customers, from picking up and storing the equipment to working with the customer on their letter of intent and returning the equipment. If a customer does not need storage, we can return the copier to the leasing company directly from their office. Many of our clients use us for copier moves from office to office as well. The pricing sheet was designed so you can get proposals priced quickly. If you prefer to have Offsite quote a transaction, that is no problem. Send your request to sales@offsiteequipment.com. The address will also be shown at the end of the presentation. When pricing a storage contract, we need to know the make, model, and serial number of every device that will need to be picked up and stored. For a standard size copier to be picked up from a customer's location, the price sheet is $175. If the customer has multiple devices, we can pick it up at the same time. Each additional device is $75. Special requirements like stairs, picking up on a specific date, or equipment outside of Arizona or Southern California. A standard size copier costs $20 per month to store, and that includes up to one accessory. Larger copiers are also listed on the sheet. We offer a letter of intent reminder service and prepaid return shipping options as well. There are 2 pages total we have for the customer to sign. The documents can be created in the field, or Offsite can get them prepared and email them to the sales representative. A few side notes here. Most dealers prefer to reimburse the customer directly for the Offsite services included in the buyout check. Offsite will bill the customer directly. We will not require any credit applications or credit cards up front. We automatically credit approve all of your storage clients. The storage document includes the billing information for the customer, equipment information, and letter of intent date. Any special requirements can be placed in the notes section below. The second page of the document memorializes the return shipping arrangements. Most of the data auto-populates, so it's pretty simple. Miles purchased tells how far from the customer location where the equipment was picked up we will ship the equipment back to. If a customer purchased 500 return shipping miles and the equipment ends up going back 1,500 miles, Offsite will credit the amount paid and bill the customer the difference. We do offer nationwide return shipping as an option to avoid any chances the customer could be invoiced more for the return. We know it's important the pickup of your customer's equipment goes smoothly. The information Offsite needs to remove the equipment is very similar to what your delivery teams need to know. Please keep these things in mind when scheduling a pickup. Stairs, truck access, pickup during normal business hours, which is 8 to 5 Monday through Friday, date or time specific. The 3 most common questions we get are as follows. Is the equipment insured while in storage? What is a letter of intent? Why does the customer need to send in the LOI? Let's start at question 1. Is the equipment insured in storage? Have you ever stored some things with public storage? The most likely answer is yes. They did not insure your belongings and requested proof of your own insurance. If you did not provide it, they billed you for insurance. We are similar and different. Similar in we do not insure our customers' equipment above 60 cents per pound. That's the base coverage included in the storage rate. We do not require proof of insurance either. Now remember about the lease agreement. In the terms of the customer's copier lease, they are required to provide the leasing company proof of insurance. If they do not, they get charged a fee by the leasing company. When the customer stores equipment, they still need to maintain their own policy. The customer just needs to let their agent know the new address where the equipment is located. Offsite can provide loss or damage coverage, but it can add $10 to $20 per month per device to the rate. Even with Offsite's coverage, the customer would still need to maintain the coverage through their own agent. So, the most cost-effective route is for the customer to notify their agent. What is the letter of intent? The letter of intent, or LOI, is language on the back of the lease that requires the customer to send in a letter to the leasing company before their lease expires. The window the leasing company will accept a letter is very strict. Often it is no less than 60 days and no more than 120 days before lease expiration. In the letter, the customer needs to list their lease number and state they intend to return the equipment when their lease expires. If they miss this letter, their lease can auto-renew for a new term. It is very important that a customer remembers this. The customer needs to send in the letter of intent because the leasing company will only accept written communications from the party named on the lease. The leasing company will also only send the return shipping instructions to the company named on the lease. Renew Alert is a cloud-based contract management system that we recommend. Renew Alert is a solution the customer can use to track their letter of intent for their copier lease, as well as a wide variety of other time-sensitive tasks. Our contact information is listed here. Our blog is being updated constantly, so please check in for more training videos and articles.